The U.S. economy shrank for the first 3 months of 2024. That's a bad thing. The way people measure this is by looking at a metric called GDP, also known as Gross Domestic Product. Historically, our GDP trends upward. These gray bars that you see right here, these are recessions, and these drops that you can visibly see in our GDP, those are major recessions. To be more precise, these are the most recent recessions, and because of inflation, they look much more pronounced than the prior ones. And the problem we have with this economic contraction of 0.3% is that if we have 2 consecutive economic drops, then we're in a recession, officially. There are some people who are saying, no, we've been in a recession for a couple of years. No, there is no data that shows we've been in a definite recession. Not even with GDP growth, but there has been no spike in unemployment. But that can change, especially if the next 3 months show negative economic output. We will start to see much more layoffs if that's the case. For those of you who want to know why we are seeing this economic contraction, it's because of the tariffs. No other reason holds any weight. And it's not just because we set up walls to trade with other countries. It is now other countries that are setting up walls to trade with the United States. The last time we've seen something at this scale was around 1930 under the passage of the Hawley-Smoot tariffs, which led to the furthering and the exacerbation of the Great Depression. For those of you who don't know about these tariffs, it was enacted in 1930 after the 1929 stock market crash, which saw a contraction in our GDP. Our legislatures at the time were also not that bright, just like today, so they thought that if they forced American consumers to only buy American by imposing massive tariffs against everyone, it would lead to an economic boom. Well, I am showing you a chart of America's GDP growth from the 1880s to the middle of the Great Depression, and as you could see, this peak right here, that was 1929. It dropped in 1930 by this little bit, but then it went horrendously down by 1930 and a little bit lower in 1931. And I want to point out something very important. Please look at this. In 1920, this little peak right here, we also had a bit of an economic crash. But because the government didn't intervene with these crazy tariffs, it was able to quickly recover. And we hit a new peak in 1929. The reason why the Hawley-Smoot tariffs was so detrimental to the United States economy isn't for reasons that you would normally think. We tariffed the world, and the world tariffed us back. But we were not the first economy to completely collapse. It was a bunch of other smaller economies that America traded with, like Canada, Japan, Mexico. They were the ones who collapsed first. And because we couldn't trade with these collapsed economies, that's when we started to witness the real catastrophe. And at that same time, before the tariff was passed, economists were screaming not to pass it because it was going to lead to the Depression. Here is a very simple chart showing the tariff rates of imports and comparing it to American prosperity. At the conclusion of World War I, we started to see the average tariff rates from the United States drop, along with the roaring 20s, which increased our economic output. It was during this massive drop in the average tariff rate where America and the world just began to globalize. As the world kept globalizing, America started to see an overall increase in the people's prosperity. Until, of course, the passage of the Hawley-Smoot and the furtherance of the Great Depression. Now, I'm not sure that America will face something as terrible as the Great Depression because the Federal Reserve has a lot more power and influence over how just the overall world economy works. One thing the Fed can do now that it couldn't during the Great Depression was increase the money supply to however high it needed to be to avoid such a drop. The world supply chain is also much more diverse, so is the American economy much more agile, but we can still suffer for it, and maybe we may suffer the most. While our economy contracted this quarter, Europe's went up by 0.4%. They haven't beat us by much, but they are above zero, which is more than America can say right now. And we are facing the threat of seeing empty shelves in the stores, maybe not for food, but a lot of manufactured goods because shipments from China are dropping. But one saving grace we may have with this negative GDP outlook is how it's calculated. Gross domestic product is just the addition of consumption plus investment plus government spending plus exports minus imports. Because the United States has had some time to prepare for these ridiculous tariffs, a lot of companies have been importing more than they normally do. And since imports, this M right here, are calculated at a negative, the larger that is, the more it can make the whole equation a number that's below zero. So that gives us a little bit of room. But if the next quarter shows up to be negative, then we're in trouble. I am the Geo Husar. I wish I had better news to deliver. Please like, share, and follow. Thanks for watching.